angel investors drive early stage ecosystems. They're the first to put money in. They do irrational things. They recognize talent and they invest money early on. These are the people that you want to talk to and get their attention because they will help you not with just money, but with their knowledge of helping you build the first blocks in your business. So I'm going to invite three gentlemen onto the stage. One you already met, Evan. He works out of New York. He travels a lot to Europe and other countries and not only invests in companies, but he spends a lot of time helping entrepreneurs learn and figure things out faster and mentor them. Kaushal Chokshi is an amazing, interesting person. He has a background on 3-4 continents. He now runs a company with about 1,000 people in Brazil, Romania, India, UK, US, all over the world. He goes around the world on average once a month. And he runs a group called Cross-Border Angels. This is a group of angel investors that specifically invest in different countries. When you have, typically angels will invest when it's convenient for them, right next door so they can go and meet with the company. Kaushal and his group specifically invest all over the world to take advantage of the opportunities in early markets. And also I'm going to invite Max Gurvits. He was born in Russia, spent early years from 8 years old like I did in the US, then back to Europe, here and there, and he's been in Bulgaria for a few years where he was part of 11, a very famous accelerator. And now he's part of Teres Capital, which is a new seed stage fund just launching and focusing on Central and Eastern Europe. So I'll invite my guests here, I'll join them, and we'll talk a little bit about angel investment. So first and foremost, I wanted to ask each of you to tell the audience why you're interested in Central and Eastern Europe.
What I love about this region is that there's an unbelievable amount of bright developers, and historically, from what I understand, there's a lot of developers working in big production outsourced businesses. And I believe in the coming years, more and more of those entrepreneurs will come out of those development groups and actually start businesses, but they need mentorship. And there's kind of an unmet opportunity that I think is going to happen very soon.
So this is one of the theses behind the conference, is that there are a lot of really talented, technically trained people all over this part of the world, and they're behind a lot of the big products. Whether everybody else knows that or not, just about every major internet company and software company has a development team in this region. So you're absolutely right. I mean, and this is why we're bringing, the talent's already here. They just need a few extra pushes to start building world-class companies right from here. Kaushal, you've seen a lot of companies, all over the world and here.
And the reasons are very similar. Like, we have been working in a lot of emerging markets. And if you really think about like China makes, even a toothpick is made in China, but there is no Chinese brand. Same thing, if you look at software, there is a big, software play in India, but there is no brand. And I think you can relate the same thing with Ukraine, and because a tremendous skill set, tremendous coding power, but there are no brands. And I think, that's what I think the key is. And also connecting not only with Silicon Valley, but also looking at the possibility of connecting with the other emerging markets.
What are the similarities and differences you see between India and Asian markets and Central and Eastern Europe?
And I think it's a mathematical skill set, analytical mindset, and also there is enough domestic market to work as a beta. I'm not talking about a major beta, but at least to work at attraction. 45 million people here, but around the area, if you can establish some traction, then I think, beyond, as I said again, beyond looking at Silicon Valley. So if you look at the mobile business, the China is number one, and the second is going to be in India 2015, and then US third. So I do see similarity. It's hard to connect the dots, for people who have not visited, but I see a tremendous similarity at a market level.
Right. Now, Max, you probably have the most experience investing in this area, and you've probably seen more companies than we've all combined. share a little bit about what you see here and what you look at and what keeps you here.
What is typical? For me, as someone who was born in Moscow, the region is a pretty natural place to be in. I never actually considered personally, having grown up in the United States and in Western Europe, to come back to Central and Eastern Europe. But my story is actually very straightforward. I had a startup in Holland, and I had a very hard time running it. It was hard to find staff. It was very hard to comply with all the regulatory, requirements. It was very expensive, very difficult to actually scale that company over there. And as I started, traveling to a place like Bulgaria, first on holidays, and every now and then talking to developers or designers there, my hands started itching to actually do something there. So this is how I originally came to Bulgaria. Life happened in such a way that instead of doing a second startup, I ended up doing first an accelerator, now a venture fund. It's a great place. I think if I look at I've probably, over the past 2 years, I've looked probably at like 1,000, 1,200 applications from startups for 11. I've been mentoring startups from all over the region, both at 11, at Launch Hub in Bulgaria, also as a seed camp mentor when they have events in the region. There is an interesting gap that I see all the time between incredible technical skill and kind of an insecurity on the other side about the product, the business. People are somehow less inclined, and I think this is a cultural thing, to speak up, to hustle in public. So that's why when people ask me what is your role, I always call myself chief hustler. I was very happy that Evan brought up the hustle topic today as well in his speech, because I think that the ability to hustle, the ability to actually get out on stage, or in front of an investor, in front of a customer, most importantly, and to actually get something done. That's the only thing that we really need to work on as an ecosystem. Once that is done, I think that as we see more and more great startup teams that are able, that are able and willing to get out there and hustle, that combined with the very clear infrastructural ecosystem benefits that we have here, wonderful people at a very small price and a great place to live and build companies, I think that we will see a great surge of Central Eastern Europe that we haven't even seen before.
Fantastic. So one thing that I've noticed here is that, or actually a lot of places, is that you have a completely different risk profile for investors, right? Everybody wants to co-invest in the Series A in a company that's already growing, but very few are willing to take the risk very early on when it's a lot harder to believe that this thing is going to happen than the other way. So in the US, there's a group of people, mostly experienced entrepreneurs, that know kind of how to recognize the signals of what's going to work and not, and they can recognize that in other companies that are very, very early. When you guys are looking at companies, what are those signals, and what do you look for, and how do you recognize that talent? And I'll follow up with another question on what do you tell other investors, and how do you motivate them to do the same in this region if they haven't had the same experience around the world?
I can add a little bit. So, as I mentioned before in my presentation, I'll just reiterate, the team's the most important thing. And you can really actually, after hearing hundreds and thousands of presentations, you really start noticing, as I'm sure everybody here meets hundreds of people every day. You can tell by the look in somebody's eye, by the determination, by how they carry themselves, how they follow up in things that they want to do, who's going to be more likelihood to be more successful than others. And it's this DNA of hustle, or another word to say it is determination, persistence, and passion. And there's one more thing I would add to that. It's humility. They know when to listen, they know when to ask questions, and they know how to follow up. And I know that might be very general, but it comes back to the team, and so that's the CEO. And then a well-balanced, there should be, if it's a tech business, it should be a deep tech science, deep tech experienced person. Sometimes when you see 3 business people, it could work, but it's going to be difficult because they're not going to have their co-founders that are the tech folks. So ideally, it's a business person, it's a tech person, it's a product or a design person. Those 3, or at least 2 of those are the main co-founders. And I think that's really resonates. So sometimes I get excited about an idea, and it takes me months to convince myself and I should not do that about the team. And other times I get on a call, and within 3 days, I'm like, that's a great opportunity, that's a great team, and it's clear. And sometimes it's a great team, but a wrong idea. So the last thing I'll say regarding this is I'd rather invest in an A team with a B idea than an A idea and a B team. Does that make sense to everybody? So the A team will adjust the idea or the business to succeed. The B team will fail.
Or the C team or the D team.
Well, yeah, let's not even go there. But yes.
So,
Absolutely.
Kaushal, would you share something as well?
So we are, and I'll talk about what we are looking for in the deal. So we are in cross-border angels. We have the group of investors around the world, about 150, and we only look at the international deal flow. That means we come at a little later stage because we like to have a little bit of traction, local traction, not necessarily, when I say traction, not necessarily revenue, but some kind of a traction. And then obviously we would like to have some local investors so that international investor can talk to the local investors. And we are coming at about $500,000 to $3 million round. So our expectation is different. Number one is local traction. Number two is there should be some local investors, and if their local investors are going through the second round, that will be preferable, some in the local investors. And the third is extremely important for us is a global mindset. That means the product has to have a global implication. It does not mean that we will not look at Me Too products, and sometimes it makes sense.
And you're really a value-add investor because you're connecting them to other parts of the world.
Exactly.
Much faster.
So not only it is the investment from India, but it's a smart investment because they want to enter into India later on, so that company can bring them the Indian market, but also the supply chain because India can give them a supply chain also. So it is a really we look at the company and say, how can we create a capital efficient company? Whether it is global capital, global sales, or global talent, and eventually a global exit. So if you can bring in some strategic investors in the mix, then probably the exit potential also increases tremendously and can be much faster.
Right. Max?
Yeah, when I look at teams here in the region, there are kind of two things that always stand out for me that I want to see. First of all, of course, what Evan mentioned in terms of formidable founders, right? It's I think that every region, every place has its own cultural tricks, cultural differences, specifics that are very typical only to this place. Outspokenness, I guess, is not a very typical trait in Central and Eastern Europe. So having people that actually, as you said, that are passionate, that can actually follow up, push through.
What about the know-it-all attitude?
It exists, but you usually cut through the crap pretty easily. So one of the problems that I see a lot is, we've invested in a number of teams with, very strong technical founders with a product idea that is very, very good, with a lot of potential, with a lot of, ways to make this work, to make this grow. And then in the end, you see basically these guys, trying to hide in a little room and afraid to expose themselves. That's one, and another thing that I see a lot. This actually makes me worried about my own work, and I think we have to be, all of us, are somehow leading the path or leading the way for startups, have to be very, very mindful about this, is that I notice that teams in Central Eastern Europe and Southeastern Europe, where I'm mostly active, are not very good at basically pushing back to comments from mentors, investors, advisors. You see people trying, very diligently to follow a way of doing things, which, a pitch should look like this and this and this, When you go to investor, you should talk about your total addressable market and your actual market. And sometimes these things are not applicable. And sometimes, startups should actually tell investors or mentors or anyone, trying to coach them, look, listen, we're not going to do this. Just to give you a very simple example, I recently met a founder from a London founder, so it's a UK team. But it's a very good example, I think, for many teams in the region, who has a very interesting product. It's called Mixcloud, musical service. And he was, a couple of years ago, when they were just still beginning, he was raising funds, and they would go to a bunch of investors with a great team, a great technology, great product. And almost all the investors told them, listen, you guys, who is the CEO? Which one of you two? And he said, no, we're both CEOs. And most investors, as you probably know, would say, oh, no. one has to be the CEO. We're not doing this. And they couldn't raise money. So they went ahead and they built it. And right now it's bootstrapped. And right now they're not actually interested in investors anymore, or probably they are for next stage. But this is, the kind of attitude that I would like to see with more teams in Eastern Europe. I see a lot of really high potential teams being too uncritical of what other people tell them. And in the end of the day, yes, you have to listen very well. You always have to listen, because only a fool doesn't listen. But I would like to see more people who are more confident in what they want to do.
I don't know, I've seen it both ways, and the thing that kills me sometimes when I'm mentoring with a lot of these companies is this know-it-all attitude, and you have to kind of break through a wall for somebody to understand that, every time I encounter somebody that thinks they know it all, to me it just says that they know very little.
Yeah.
Because the more we learn, the more we know how little we know.
Yeah.
So that's also something I've noticed. I don't know if you guys have.
Yeah, I hear it all the time. I mean, the know-it-all versus I'm very opinionated and I've got a lot of expertise. I'm willing to listen. I might not listen to you or one of us, but a comment saying, and that's fine. I know I don't have all the answers. But if somebody says to me, that's very interesting, we've decided to go this way, right? What I would love to hear is in 3 weeks an email, just wanted to let you know that our decision worked and it became validated. My response will be, great, congratulations, I was wrong. And I would be happy to be wrong. But I don't get those emails. Or, hey, your suggestion, we tried our way, and our way was wrong. Now we're trying your way, and I'll let you know how that goes. That little communication is one of the most valuable things that shows the personality of the team.
Right.
And it's amazing how those little pieces, do that. Maybe I'm going to get 500 emails tomorrow, and that's fine. But I will respond to most all of them and do the best I can. But even the process, even if I don't respond, and I try to respond to all of them, in my mind, I will recognize it. And/or the next time you send me an email, I'll search for the email and see the history, and I'll see the trend. And that kind of communication, I like when they're strong-minded. But if they don't respond or don't listen or not communicative, it drives me mad.
There is a very thin line between the exalted view of self-esteem and arrogance, right? Mm-hmm. And we really have to figure it out. And I think one other thing in our investment committee, which we always look at, and we give a degree to it, is how much moldable the entrepreneur is. It doesn't mean that
how much what?
Moldability. How can you mold? How flexible they're going to be. It doesn't mean that that we want to control.
Oh, no. I have no interest to control.
But I think, obviously we are talking to somebody who's a domain expert. Obviously they're in business, they're an entrepreneur. But if they're not willing to listen, then it becomes really tough, for us to go further.
Agree.
That goes back to the team,
So the main reason why, just to reiterate on that comment, is my perception, which is not 100% of the time, but the perception is that if that entrepreneur is that way with me, that entrepreneur is going to be that way with their customers, with their team, with their parents, with everybody, and that could be a problem. Yeah. Telling your clients you're wrong is probably a problem.
Right.
Okay, so I don't look at it just as how I feel emotionally about this person, but chemistry is important when you're looking for teams. Excuse my back over here. When teams are doing something to me, but I look at it as how is this person going to interact with their employees.
Well, also as an early investor, you're about to get married to them for 5 to 10 years as well, right?
And also, another interesting thing is when you are looking at international deal flow, and the cultural aspect, it enhances tremendously. If you ask somebody in India, that any question, usually they will say no problem, even without realizing that. And this is known fact, right? You ask somebody in Bulgaria, they always starts with no. They cannot be done. And then now you have to work on it. It can be done. But interesting thing is when you connect the Indians and Bulgarians together through Silicon Valley, now you see the dynamics.
I was actually going to ask you about that. So in my experience working with Indian and Asian teams, basically the culture is don't stand out. Right? But in Eastern Europe and Central Europe, you have a culture of kind of don't believe anybody, believe only in yourself, and doubt everything. Right? So I've noticed that, and having gone through .com and waterfall software development, where you basically say, okay, we're going to write a spec, we're going to hand it off, throw it over the fence, the programmers are going to do their thing, hand it back, that worked. and that was a big boom in India. But in the last 5 years, when agile development kind of started, Eastern Central Europe and that doubting personality really kind of drove this area, and kind of Ukraine blew up with outsourcing and all of that.
Right.
What are your feelings? Because you're in both areas.
I think, when we started one of our company, and we actually floated something called CMM rebels. We were looking for people who are not confirmed into the CMM. That means, because if you look at, China and India both, traditionally people have been doing what they are told. So
Right.
if you give an excellent documentation, they will do a great job. So creativity is a question mark, particularly more in China than India. But now I think, even if you take, 2% of everything, still it is big. So now you can find that in the last 10 years, a lot of, there were 35% of startups in the Silicon Valley, there are Indians involved.
Right.
So there is, in the last 5 years, we find a lot of movement that, the companies are, and within the India also, the market has blown up. The companies are becoming big within India. So I think that experience, we can find people who are creative, who are individualism, which is, and if you look at, and we've been hiring people around the world. We have 1,000 employees in our companies, and our average age in our company is about 29. Excluding myself, obviously. So,
Because you're 30.
Yeah, you're skewing the average a little bit, aren't you? You're 31, right?
and so, what I've noticed that the people under 30, they almost has the same American viewpoint of success, not cultural. Cultural is there, whatever they are coming from. So it's a very transparent way of doing it. Individualism. I want to do it right. Triple bottom line. And this is across the board. And you can always find 2 or 5% of the population in any city, which is confirming to that.
So would you say that drive and the new technology companies in India and that necessary switch of culture, is that driving a change in general culture in India?
Exactly. And I think, so if you look at, India, 54% of the country is under 25. Right? That is 540 million people under 25.
Amazing.
Right? Now, if you give them, these young people, the mobile devices and the broadband, so whether from it is e-education to telemedicine to everything is in the play. That experience actually will make Indians more aggressive globally. Right? And I think, we believe in the city-state. So when you look at talk to the country, it skews the game. So we believe in city-state. The 65% of the world population will be living in some kind of urban area by 2025. So we've divided the world into city-state. So Hong Kong and Singapore is a classic city-state. But if you take Osaka, which is like $450 billion market, if you take Bay Area is almost $500 billion market, Tokyo is a $1 trillion market. So we divided the world into the city-state. So if you start looking at the city-state and look at the Eastern Europe and consider some of the city-state, you can have a really beta here. You can have a real case study here, and then replicate that by customizing 20% at local marketplace around the world. So you don't have to look at China. China's GDP may be growing at 8%, but Shanghai's GDP is growing at 14%. So if you can create a kind of a beta here in any of the comfort zone city-state, and then you can replicate that.
Great. Now, Max, you have more experience, and you could probably pick apart different parts of Europe a little bit. How would you compare your experience in Holland and Bulgaria, and you can find the little fine differences?
Definitely. Well, there is, I think, in general, a very big difference between Western Europe and Eastern Europe. Not only economical, obviously, or historical, economical, cultural differences as well. I think that the more interesting thing is that even within Central and Eastern Europe, we have big differences. I think that places like Hungary or Czech Republic are actually very Western in many ways. If I look specifically, and I was thinking about your comment, about Eastern Europeans being so confident in themselves, and you can only trust yourself, trust no one. For instance, in the Balkans, there is an element of that, and by the Balkans I obviously mean former Yugoslavia, Bulgaria, Romania, this whole southeastern part of Europe. But there is also, and this is something that that I'm trying to kind of rally against. There is also this feeling of, yeah, but whatever happens in America, that's obviously America. It must be much better.
Right.
There is this thing, and this is I'm always surprised when you're in the States and you go to meet startups at a school or university and you actually see people pitching. They're not even talking about funding, but everyone is talking to customers. Everyone is selling. Everyone is quite confident of themselves, and I guess this is what you meant by this American style of doing stuff, by getting out there, being transparent, not being nasty to your customers. This is something that I think people have still, a lot to learn about, especially in the part of Europe where we are. Something else that I guess is a big difference as well. Here in Ukraine, we're very lucky to have all you guys sitting here because you could also be downtown protesting right now. What happened, for instance, in Bulgaria and Romania and also in Croatia, is that these countries, as they got into the European Union, for which which is an amazing thing, which is also something that should happen to Ukraine, obviously. But I do notice that a couple of years into the process, people are starting to get spoiled. Spoiled by opportunities, spoiled by funding, for instance. Right? The fund that I've co-founded, 11, it was built with European money, 12 million euros of which is a big fund, even for the region, let alone for Bulgaria. So if I could kind of stress that difference, the one thing that I would like to that I would like not to happen in Ukraine is that people would get too complacent about the opportunities, because you really have to use this amazing benefits that we have. And
I think it's been a while before we're spoiled with opportunity here.
well, it went very fast in Bulgaria, so
that's good. Well, we're looking forward to that. Absolutely. So let's talk a little bit about, again, more on the culture side, is the acceptance of failure. In Japan, or Korea, you can look and say it's completely unacceptable to fail, and startups 90% fail. So everybody has a fear of starting up. How do you see this region and culturally, and what would you add on kind of fear of failure and how people can get over it and get out of big companies and take a risk?
You know the area the best, Max. I'm going to pass it to you. But in general, the way I look at it is I never in my life want to say would have, could have, should have. That's just my probably a New York personality. But woulda, coulda, shoulda is the way to say it.
Right.
And I never like to have regrets. And so I think similar mentality is if you ever have a feeling, do it. Otherwise, you'll never know. And life is too short. And it's just really that simple. But I know that in a lot of the Southern European countries, the culture is anti-risk. It's also anti-success. It's frowned upon to have a big success as well. And that's actually starting to change. And the interesting thing is that the bad economies is the best time to start companies because there's so many people looking for jobs. Or when you have nothing to lose, it's easy to take a risk. And I think, as the economy is struggling in most of Europe, it's a great time to say, well, why don't we just take a chance? Why don't we just do it? And the economy comes back eventually because it's all cycles. You'll have another chance to do something in the future.
Good. Kaushal, I think you have something to add on the topic.
Yeah, I think, when I look at, and it depends on, there is two aspects of it. It also depends on what kind of investors you have in the country. The investors are, let's say if you have a speculative business going on in the country, it's very hard to get angel investors, right? So for example, one of my real estate portfolio in one of the emerging countries has appreciated 12 times in the last 3 years. Which angel investment will do that in 3 years? So you have a disconnect here. So if there is a lot of speculative business going on in the country, the investors are not looking for real estate, some kind of underlying real estate as a securitization. And that leads to also that people don't want to fail because it's hard to come by money. The investor has a lot of other choices where they could have made much more money. But culturally, I think, it's changing around the world. What I'm seeing is, that culturally, I think there is more and more acceptability of failure. And again, I don't know much about the local culture, that how it is accepted, culturally about the failure part. But it's given, and also there is another track also that you have a model where you invest in 10 companies, 9 fails, 1 is a blockbuster. There another model is in Hollywood where you invest in 10 projects, 6 are break even, 3 failed, and 1 is blockbuster. I think along with the Silicon Valley style hardcore exit oriented investment, there is also a possibility to have revenue generation, growth oriented, less risky in a culture where it is not to go that aggressive, right? I mean, total angel investment around the world is about, let's say about $22 billion in the US, and about 4 or 5 billions in the Europe, and the rest of the world another $2 billion. So it's less than 30 billion. So in a world economy, it is like 0.000001% of the world economy, So there is a much bigger, field. If you want to create an angel as an asset class, we need to involve people who are revenue generation, who like long-term, who like to build companies, and not look for hardcore exit. The company has to be sellable at any point of time, but not necessarily it has to be exit. So I have a different viewpoint, and that's why in Cross-Border Angels, we have a group of investors who are more patient, who are prepared to work a little bit longer, because the local culture does not. I mean, you go to some of the countries, and a 25-year-old kid gives a presentation, and we say, "What's your exit plan?" And the guy says, "I haven't even started yet."
I barely have an entrance plan.
Yeah. Exactly, right? So I think there is another model possible where we can take the spirit of Silicon Valley, but you can localize for the local culture.
I want to add something to that. So there's also, I agree that that's one way to look at it, but I read an article recently that said a kid before he was 20 years old sold 2 companies. And I was like, okay, I want to read this article. And I read the article. The first company was done when he was about 14, and he sold his company for $10,000. Not a big exit.
Yeah, but
he made $10,000, and he put it in the bank. And I was like, wow, that's fantastic. 15-year-olds puts $10,000 in the bank. He sold his next company at 20 for $100,000. $100,000, 100% of the company. It's all $100,000, put it in the bank. It doesn't have to be millions or billions. Just build businesses that make some money, and maybe somebody wants to buy it. Your next one, now you've learned, and he learned a lot in each one. The next one, if you want to go for 1 million or whatever it is, or just build a business, it's not bad to have a business which makes you $1 million every month and you never sell it. There's nothing wrong with that as a business.
There's definitely nothing wrong with making $1 million a month.
Right, but I'm saying, in a lot of these conferences, I mean, a lot of our discussions, I might not invest in that, but I'm going to give you a pat in the back and say congratulations and hope you buy me drinks. But don't worry about it. It's not just raising for the big exit or the big money, or it have to be like Silicon Valley. The goal, once again, you guys got to be happy and do something that pays the bills and you enjoy.
Absolutely, yeah. I think personally that probably outside the United States, pretty much everywhere you have a risk-averse culture. Different ways, obviously. In Europe, it's one way. I guess in Asia, it's a different way. I can't speak for Asia. What I think is important in terms of, helping create a very viable and very successful startup ecosystem is taking, a couple of, good examples. For me, if I look at what is happening in the Balkan region, there are 2 kind of clear steps which seem to be paying off. First of all, in Bulgaria, pretty much like everywhere else, we have a risk-averse culture, a pretty undeveloped economy, which basically means that most of the parents of startup founders don't have a single freaking clue what their kids are up to. And, because business is usually associated with, big guys and big black cars, if you say you're an entrepreneur, you're in business, immediately most of your parents, would be unhappy with what you're doing. Now, something that has worked very well in Bulgaria, and I think also in a couple of other regional countries, is that we have built, campaigns with the press, the television, the national business newspaper, applauding startups, and sometimes people are even critical, like, why is every single startup in the country getting featured in a newspaper? Why does that have to happen? I think it does have to happen. I think that's actually how how you build that initial step. That's one step. I guess the second step, and this is something that, for instance, you see in Slovenia, or maybe also in the Baltic countries, which are a little more ahead in terms of the startup ecosystem, is that once you have founders that have successfully done something, even if it's just raised an A round with a couple of Silicon Valley investors,
the halo effect.
Once they go back, it's a completely different story. They have validated, and they immediately attract a flock, a crowd of people who love what they're doing. Groupies who then go on and found their own startups. And I think that if you initially help push awareness of entrepreneurship, that it's okay and it's not dirty or illegal, and then help the founders that actually come back, celebrate their successes together, and that which is also a skill which we don't have. That really helps.
I like to add something to that. I don't think you can build a startup ecosystem without people from outside. You need people from outside to have that interaction going, to have that thing going. Because otherwise, you're talking to yourself, you are talking among yourself. Startup Chile is a classic case. Like, they have 500-600 companies already there. And you can clearly see that, when people coming from outside, they exchange, they give out new ideas, and there's a lot of, creative exchange which is going on. Then it gives you a different perspective from the local standpoint. And Silicon Valley is a classic example. The why it is thriving is people come pouring in from outside. I mean, we have like 15, 20 people in a room and nobody speaks proper English when we meet in Silicon Valley.
Right, right, absolutely.
That's how it goes.
Now, let's shift topics a little bit into what a lot of these guys in the room, if they've ever pitched local angels, experience, and it's kind of predatory investment and kind of the greed, not knowing that they're kind of shooting themselves in the foot. Let's talk about, if you don't know, for those of you that haven't pitched yet, there's lots of people that will give you a little bit of money and take half your company. But you don't really have anywhere to go from there, right? So these guys don't do that because they know that taking a little part of something interesting and help it grow is a much better investment. What would you say to those investors? What do you say to those investors when you talk to local angels and people that are putting money into the ecosystem? What do you tell them, and how do you inspire them and teach them about investing kind of Silicon Valley style?
Very clearly say I would never invest with you as a co-investor. And as an entrepreneur that I was for 19 years, saying I would never want to be a collaborator with you as an investor in my company. That's what I say to the investors. On the flip side, the entrepreneurs have to figure out it's not the ideal situation and try to avoid them. But if you're at a situation where you need money and you have no other option, you really have two options. You either do that deal or you go out of business. I'd rather do that deal and find a way to get to the next stage and then renegotiate that deal.
Yep.
Or sell and win or have a business and then learn and go again.
So more precisely, what do you think is a proper early stage deal? What should they expect? What kind of deals should they be looking for? And what kind of deals should they be going away from?
You guys are looking at me. Okay, so what's great is that there's starting to be templates out there. So if you look at all the accelerators, which is very early stage, and they're putting roughly anywhere from 10,000 to 50,000 euros, and taking anywhere from 4 to 15%, right? And so I would say it's better between the 5 and 10%. But also a lot of these accelerators are also offering, when you join them, an opportunity to also leverage 50 to 200,000 of free services or in-kind services. So it's a package deal. In addition, there's other accelerators that have a deal with other investors for a convertible note of 50 to 200 or 300,000 after you graduate. So back to answer the question, I would say early investors taking, depends on how much money they're giving. So at 50,000, 100,000 for 5 to 15% of the company is roughly ballpark. And 10 to 20, it depends if it's the first money in, but there's so many variations to that. So I would say definitely less than 20, ideally less than 15. But it also depends on some of these investors will work with you.
Right.
Right? So for me, if I invest, I will also become an advisor, and I'll roll up my sleeves, and I'll do 20 hours a week. I'll help you close deals. I'll do whatever it takes to get us to that next stage. Other investors that give you $50,000 and want 50% of the company and you never speak to them again, that's a bad deal.
Yeah. Right. So how many of you, real quick, know what a convertible note is in the room? 1, 2, a handful. Oh, Peter knows a convertible note.
Yeah.
So, anybody care to explain in summary so everybody knows what a proper early stage investment is and what a convertible note is?
I think, and I would like to add that, whenever you have conditions where the local investors are not, let's say, savvy enough, to be like a Silicon Valley, that means they're asking for much higher percentage of the company, more than 50%. That means, you're actually hiring a CEO, not really, funding a company. From the entrepreneur side, I think I like to, if I was an entrepreneur, I would like to create some kind of leverage, either as, some kind of attraction, some kind of revenue, and go as late as possible, to the investors or to negotiate. You have to take the money, you have to take money, I understand that, and you can change the game down the road. But, and in some cases, if I'm a domain expert and if I really like what I'm doing, then I don't mind a passive investor, right, who doesn't want to go. And usually in countries like this, there are passive investors because people who have made money, they want to make more money. That means, they're not actually have time to give which, Silicon Valley style, where, people want to mentor, they want to, help them. I don't see that happening in China or India. They don't have time. They want to make another next billion and next billion. But if you know what you're doing, and if you can get a passive investor, and you can get other mentors who may not have invested, then I think I can mix that. So you can have somebody from Silicon Valley as a mentor, the local passive investment.
Yeah. So I think that in terms of what a convertible note is, maybe it's good to get back to that point. It's an investment in form of a loan, which gets converted into equity of the company upon certain future conditions, usually at the next investment round. I guess that most investors do that because it's safer. You don't have to do valuation of the company. You just give money and say whatever the next investor puts, whatever price it puts on it, that's the price I'm going to get. There are a lot of course, condition caps and other nuances. But I think that in terms of local angels, I guess it's a love-hate kind of thing that you should have with this phenomenon. I think that the best people to educate, if we call them, unsophisticated angel investors, are probably the founders themselves. From the point of view of the founder, the real problem of taking money from someone who will take a very large chunk of your company, anything above 30% is basically absolutely off limits. And the reason for that is because if you then go to the next stage, imagine you're actually doing very well as a startup. You get to the next stage where you're talking to more sophisticated investors, to a VC fund from, let's say, London or Berlin or Sofia or San Francisco, and that investor, even if he likes your company, who is he talking to? Is he talking to the person who actually owns the business? No. So let's talk with the owner then, which is this angel investor who actually has that huge chunk of equity. Oh no, wait a second, that angel investor is not going to work on the company. So you can either talk to the guy who owns but is not going to work, or you talk to the guy who will work but doesn't really own, he's an employee. So that is the problem. This is how to understand it. I think that in reality, I guess that everyone has to be honest with themselves. I think that most angel investors from that kind of local kind of guys that are very hungry to get equity, in most cases, these people are very good at something that is not always exactly what the startup wants. I've been to very small countries in the region. Just to give you an example, Kosovo, which is a very, very small country. Many people will even say it's not a country yet. It's a very small, young society which is growing at the moment. There are simply not many or not at all sophisticated investors there. And if you're a startup team there, as Evan said, it's pretty much the only deal you can get. But you should also understand that the kind of people that will invest in you there, they know that market, which is a market of like 1.5 million people, right? Which is almost nothing.
There's another $1.5 million market called Estonia.
Code Estonia, which that's a completely different story though. But that's a completely different story, very open society. What I'm trying to say is that you should, you should always do due diligence on investors as much as investors do due diligence on you, and ask them very hard questions. And I think that the toughest question is, what is this investor going to contribute? Because apart from money, like if his skill is to build a brick and mortar business in a very small country or in a small city in a place like Ukraine, do you really need that guy? Shouldn't you just just like Evan said during his lecture today, shouldn't you just get your ass on AngelList and hustle Dave McClure to invest in you, like Matija Kopic from Croatia did, the guy who founded Farmeron, and he came from a very small town in Croatia as well. So there was no reason for him not to take some local construction entrepreneurs' money, but he didn't do that. He went all the way to Dave McClure. And
they did raise some farmer money early on from friends and family, and then went to the other ones. But I totally agree. You mentioned an interesting point to make sure. Does everybody understand the due diligence? So the due diligence is when the investor's asking you all these questions and asking you about your business and learning about you. You definitely should do due diligence on that investor. And what does that mean in my mind? So you can say, hey, investor, you learn about them. But the way to do it is, can I have the names of the people you've invested in before and their email? I want to talk to them. And then more importantly, you speak to them. But then you find everybody else from them who he invested that he didn't give you the names. Because he won't give you the names of the ones that failed. Or he won't give you the names of the ones he got in an argument or she got in an argument with. It's called due diligence on Broadway and off Broadway. The off Broadway, you're going to learn the most about these people, and they don't even know you're going to be doing that due diligence. And don't be worried if they find out. It'll actually incent me more if you speak to somebody that I didn't give you. That means you're a hustler. You're finding the ways, and you're not accepting everything that I say as the truth. Meaning, you can only talk to these 3 people about me, because there's 4 other people over there that I didn't give you names of, but know me just as well.
I think the selection of investors also depends on your end game. What is your end game?
Yes.
If the end game is exit, then it's a different scenario. If the end game is IPO, it is a long-term company, it's a different scenario. Also, you have to work backwards from the end game. That means, are you going to raise 3 times money? What is the milestones? What is the valuation at different milestones? What will be the dilution at the different milestones? That means you need to find investors accordingly, otherwise it will be a disconnect. If the investor is aggressive and they're looking for 4 or 5 years exit, but if you have to go to 2-3 rounds of money, if you're not clear, there is tremendous friction at right that point. So if you're not clear about what is the end game, then you are going to select investors whatever comes along, and then there will be a disconnect going forward.
No, I totally agree with that. But in an emerging economy like this one, as far as in the tech space, he's absolutely right. But I would not worry about that yet. I would focus on building businesses and validating the businesses. And that's going to be a good problem to have, because then when you get to that stage, you're going to talk to investors. Right. And then come back and email any of us and talk about, you're absolutely right. But it gets confusing, I think, for many entrepreneurs, all of these different, what are the agendas of the different VCs, how to know all of this. And I think one step at a time, find those right in early angels, and they'll help figure that out.
Right.
So what would you say when you talk to entrepreneurs here and everywhere? What are the biggest misconceptions that you get from entrepreneurs?
They think the goal is raising money rather than building a business.
Okay.
That's the biggest misconception. We want to raise money, we want to go to Silicon Valley, we want to go. It used to be the only place to raise money. It's not anymore. It used to be the only place to build a business. It's not anymore. That's the biggest misconception. But it's just because times are changing.
So what do you tell them when you hear that again and again and again? What do you tell them to try to shift their perception?
To the presentation I gave this morning. So it's get local validation, get local investors, and solve the problems for your clients. The more problems you solve, the more they'll pay you. And if you can validate that, then you go start raising money.
Kaushal?
I will say that not only Silicon Valley is one of the route but definitely look at the other markets, emerging markets. So I will add on the building business, good business, and that business should include that our markets can be somewhere else beyond Silicon Valley. you maybe want to go global through Silicon Valley because of the better branding, but you definitely have to look at the markets which are, the sales cycle is much shorter, it can be much faster, it can be very unstructured, like you may have it here, and there are certain markets which are also unstructured, like if you want to sell something in the US, it's very structured. The whole world is trying to sell to the same market, And so you want to look at, some other markets also where you may have, a faster success, and then you can piggyback on that success.
Absolutely. Well, in terms of misconceptions, one of my favorite, if that's the word, pet peeves, is this general feeling that you have a bunch of investors who invest at whim, and they're basically sitting on money, whether it's theirs or VC money or whatever it is, and you have to basically try to be at the right place at the right time, somehow hustle that person into investing, even if it's not really, even if he would find out the truth, he probably wouldn't invest. I see this mentality, which in reality, once you get into the investment business yourself, you see that it's actually the other way around. My feeling is that I have to chase entrepreneurs that would allow me to invest in their businesses. And when there is a great deal, and I know that a couple of investors want to do it, and that entrepreneur would allow me to invest because we have a relationship, because we have worked together, I have invested before, or something else has been happening between us. That is the way it really is. So I think that people should really, I would suggest to everyone not to view investors as people that have the choice of investing in anyone, and basically that if they would invest in you, especially when we were talking about angels, that you have some kind of extraordinary luck, because that's not the way it is. You should really, Mark Suster, who's a great venture capitalist, he always says that you should invest. Investment happens not in dots but in lines.
I was about to just say that example. So.
Yeah, not in dots but in lines. So make sure whenever you have any kind of connection with someone you think would be a great investor, that's the first dot. Then make sure that you have the next dot and the next dot. Keep building that relationship. Make sure that those dots, when they become a line, that it's a line that goes up. It's an increasing relationship, an improving relationship. And basically make sure that guy actually wants to invest in you more than you want his money. And that's the way it really happens in reality in most cases.
So there's Mark wrote a blog post about that. So everybody should read that who's thinking about or is trying to raise money. Mark Suster, Invest in Lines, Not Dots. If you search for that, you'll find it. Read it like it's the Bible.
Which it is.
That article. He writes long blog posts, but if you can filter out everything.
There's a couple of very good ones.
That's very good.
All right, so we have 5 minutes left. I want to finish it off with a lightning round. You're going to go and see companies up in the expo. There's over 70 companies from 10, 15 different countries here. And there's lots of entrepreneurs here. They're going to come and pitch you. You have an investor sticker on your badge.
Oh, yes.
Everybody,
yes.
Right?
Yes.
And everybody, if you see an investor badge, that's the person you talk to if you're pitching. What are you looking for? How do they get your attention? And how do they pitch you and get you to get interested?
You start.
This time it's me, right? I don't know, as I already said, I'm looking into personalities. When you meet, especially when it's a big event like this, I understand that for many people coming here, with great projects, it's probably not every day that they can meet, a guy like Evan, for instance, or someone who runs a VC fund. So you have this. People tend sometimes to overwhelm you with information, want too much of your time. You have the kind of people that, walk up to you, give you a business card, and then walk away, which is also not a great way of establishing contact. From my own point of view, being very aware of the fact that you can't really credibly, reasonably form an opinion when you see, 70 teams you said?
Right.
I'm trying to see personality. I'm trying to see genuine people who love what they're doing, people who love technology, people who have a great team, when it's only a CEO and he's talking all the time, and every time you would ask the other team member to say something, it's again the CEO that answers. That for me is a situation that I don't like at all. So for me it's about seeing great solutions, great interesting project ideas, even if they're very unrealistic, which have an interesting market opportunity, but most importantly a great team, people with a spark in them. That's what I like to see.
Yeah, in our case, obviously, we're like the sparking, but with a global mindset. We like the companies which we can see that, what can be done globally. You can touch millions through your venture. Obviously, the way we are investing is late stage, so we're looking for a little bit of traction, and you have local investors, that can help us, but I think mainly, even in some cases, it's a Me Too product, and lot of products, in these countries are Me Too. You're duplicating something in the Silicon
Copies,
Valley,
yeah.
But if it has a strategic, fix, in the sense that somebody from other countries will like to come here and access that market, then we would like to look at that.
So I'll reiterate. So definitely the team, as I said earlier, like Max said, and similar. What I love finding in European and Eastern European and this whole area, companies that have done the local validation, the local investors, but are ready to have validated reasons to come to the United States. And since I'm based in New York and I've done 7 years in Silicon Valley and have a lot of connections there, I help those companies grow here and then come over and raise money in the United States and hire teams in the United States, whether or not it's in New York or San Francisco. So that's the main reason that I try to leverage both and spend half my time in Europe and half my time in the States. So in those verticals that I focus on, it's very simple. Digital imaging and video tech, so anything with a sensor that's capturing visual content for businesses or consumers, and any business-to-business SaaS business. And why? It's my background. It's what I know. And if you come up to me and pitch me something that is not one of those two things, I'm not going to be interested. As an investment, I might be interested in introducing to somebody else if you have the spark or the interest. But I'm really focused because manage 3 people's money, and it's a small fund, and I focus on what I know, and I focus on not wasting anybody's time. And you guys should think the same about the people that you approach as well.
So to summarize, show your personality, be unique in your idea, and know the investor that you're pitching. Know what they're interested in. Don't just pitch any different investor. And that actually, when you very early on, pitch angels, not venture funds. They'll take a meeting with you, but they're not going to give you $3 million before you're ready. Okay? Thank you, gentlemen, very much. I hope it was very interesting and helpful for you. Thank you.
Thank you very much.